Hey guys, so today I have a very special video for you as I'm going to be sharing with you exactly how you can get started investing in real estate and taking advantage of all of the financial benefits that come from real estate with as little as $500. Now that might sound crazy and completely ludicrous because, well, real estate is known as one of the most expensive things one can buy and it's continuously rising in price and value. But stay tuned because there are now ways you can invest much less money into portions of real estate that allow you to become a real estate investor without actually having to go through the process of saving a bunch of money for a down payment and putting everything you have into a property. And just to be clear, we're not talking about no money down loans or other types of financing that leave you extremely over leveraged and at major risk of market downturns. Before I get started, don't forget to hit the subscribe button down below and comment any video ideas you have in the comment section. So let's get into it. So how can someone with very little cash, maybe a couple $1,000s or even as little as $500 that wants to start investing in real estate get started? Well, you've got a couple of options. The first option would be to take that little money and put it towards a very cheap property, probably in a cheap neighborhood as well, in the form of a first-time home buyer loan, maybe putting 3 to 5% down or even less in some cases. Now this is not a bad thing, and many people buy homes with small down payments, but if you're looking at this from an investment standpoint, then it's very hard to make a property like this profitable because your payment will be quite a bit higher by putting little money down. But this can still work, and it all depends on if you find the right property. Another option would be to partner with a friend or family member, or perhaps a couple friends and family members, to raise the necessary money to put towards a property. This is a great strategy, and if you do have some friends that also have a little bit of money saved up and want to partner with you, then this can be a good way to acquire a property without having to put a ton of your own personal money into it. The third option would be to just wait patiently until you do have enough money saved for a down payment that you're comfortable with. But who knows how long that'll take, especially if you're trying to buy in more expensive markets such as California and New York. And the last option is what we are going to be talking about today, which is a relatively new form of real estate investing, and that is investing in crowdfunded real estate. Now, crowdfunded real estate is just as it sounds. Investors that are out there hunting for deals need capital in order to acquire the deal and will open up the deal to potential investment partners via crowdfunding. Over the past decade, quite a few platforms have emerged that connect real estate professionals to potential investment partners and allow investors with limited capital to put some money into deals and start reaping the rewards. In fact, one of these platforms even allows for investments of as little as $500. Now, the concept of crowdfunding real estate is not entirely new. Even before the internet, it was a common practice for real estate investors to pool money together from friends and family in order to acquire a deal, and then they pay out their investors a portion of the cash flow from the property on a monthly or a quarterly basis. However, with the emergence of the internet and a much easier communication channel, the concept of crowdfunded real estate has become much more popularized simply because it is so much easier for real estate professionals to get their message out to potential investors. Real estate developers and syndicators can now find a deal and post their project on these crowdfunding platforms to attract the necessary capital for the deal without having to go out and prospect all sorts of investors like the good old days. So what are these platforms and do they actually work? Can you actually make money from real estate by placing $500, $1,000, or maybe $2,000 into these funds and crowdfunded deals? Well, the short answer is yes, but like any other investment, your money is at risk of market volatility and potential downturns. But if you're questioning the legitimacy of these platforms, then yes, these are professionally run real estate projects that need your money in order to finish the deal, and investors are paid out like any other investment. They get a portion of the income from the property based on the percentage that was agreed upon when they signed up and put money into the deal. So now let's talk about a few of the platforms that actually orchestrate these deals and partner with real estate projects to allow both accredited and non-accredited investors to get in on the action. The first one I want to mention is called FundRise. And this is probably the most popular real estate crowdfunding platform as of now. There are quite a few others, but FundRise has done a good job over the last couple of years of positioning themselves as a dominating force in the industry. FundRise is also the only platform that allows for investors to put in as little as $500. And there are other platforms which I'm going to mention here in a moment, but these other ones do require more startup capital, typically anywhere between $5,000 and $25,000, which is still quite a bit less than you need to get into an actual investment property. Now, each of these platforms and projects may use different strategies, but the concept remains the same. For instance, certain projects posted are designed to be fix and flips, where the project leader is raising money for the project, with hopes to quickly rehab it, sell it, and cash out while also paying out their investors a nice hefty profit maybe a year or two down the road. A good platform for these types of deals is called groundfloor.us, where projects usually last around 6 to 12 months. Other times, the goal of the project is to acquire a building and hold it for years down the road to provide cash flow to its investors on either a monthly or a quarterly basis. The goal of the project is typically stated upfront, so you know what kind of deal you're investing in. Now, we have a few other key points to go over so you fully understand what you're getting yourself into should you choose to put your money in one of these funds. First off, these platforms are not just open to any investor or developer. It's not like you could just post a picture of a deal you want to buy and then start trying to get people to put money in. It's not like a Kickstarter or an Indiegogo where postings are open to pretty much anybody looking to raise money. Each deal that is posted on these sites and opened up for investment is carefully vetted by the analyst team at these companies. Typically, only about 5% of the deals that are submitted and looked at by companies such as FundRise are actually published and opened up to investors. Now, the reason for this is that these platforms want to make sure that they are offering their investors quality deals only. They're looking to create an exclusive platform where lower income investors can consistently put their money into deals run by bigger money and more sophisticated deal analyzation. Now, each deal is going to have a different projected return, and when you look at a deal on one of these sites, it will typically share the projected cap rate, cash-on-cash return, and other helpful numbers so you know what kind of returns to expect. Most of these platforms promise deals that yield returns of anywhere from 8 to 13%, which is pretty high, so you know these platforms are spending a lot of time analyzing deals and finding the ones that are right for their investors that are actually going to yield the best returns in hopes that these people will continue placing their money with these projects. So as an example, if you put $1,000 into one of these crowdfunded real estate deals, you can expect to see anywhere from $80 to $130 per year from this investment up until the property is sold, in which case you would get paid out your cut for the sale. The platform is typically going to take a cut of anywhere from 0.8 to 1.2% in exchange for putting the deal together and orchestrating the funding, and then the rest of the money is paid out to the deal's respective investors. Now, another point I want to mention here is that with a lot of these projects and deals, you are not actually investing in the real estate itself. You are actually investing your money into shares of a corporation that then uses that money to buy and operate real estate, which are referred to as REITs, or real estate investing trusts. This is different than buying actual real estate because you are buying shares of the corporation, much more like buying stocks, except that the return you are being paid out on is based on the income generated from an income property rather than, well, really whatever a company might sell. You can be much more confident investing in these REITs knowing that your money is being spent wisely by being put into stable real estate investments rather than being squandered into various other projects run by public companies. What this means is that your name is not actually tied to the real estate itself. Your name is tied to the corporation, which then owns the real estate. You still get the same benefits that real estate offers any other regular investor in terms of monthly cash flow and profits from appreciation, but don't be mistaken, you are buying shares in a real estate company rather than the real estate itself. Now, this is not the case for all of these projects, as some of them do allow for investors to actually own a piece of the property rather than just shares in the company. But these types of projects are typically reserved for accredited investors only, which requires an annual income of $200,000 or a net worth of $1 million. And these are guidelines that were set by the government designed to protect lower income individuals. If you are investing smaller amounts, then typically you are investing in a REIT formatted investment. The one thing I'm not entirely sure on is the tax benefits and obligations that come with investing in these types of projects and platforms. Real estate ownership obviously offers a lot of tax benefits and write-offs, but I'm not entirely sure how it works in this situation, so you are going to have to consult your tax professional or accountant to see if you'd be eligible for any kind of write-offs or returns. I know that one good thing about investing in a REIT is that these trusts are actually not taxed on a corporate level, meaning that the profits from real estate earnings by a REIT are actually not taxed at all, even if they're in the billions. The corporation keeps all earnings and then distributes the earnings out to its investors, where the investors are then taxed on their personal tax return. So this is much better than buying any other kind of share or stock, where the profits are taxed at the corporate level and then again on your personal tax return and the tax returns of each of the shareholders in the company. So again, meet with a tax professional to see if you can swing any kind of benefits from an investment like this. So that's going to wrap things up. I also want to clarify that this is not a video sharing that you should not be purchasing an actual property and only investing in real estate funds. Buying a personal property or perhaps a rental property for yourself is one of the smartest and most intelligent financial moves you can make, assuming that it's a good investment. investment, so definitely still stay on that track. However, if you are wanting to get your feet wet with some real estate investing and actually get in the game some, but you're nowhere near having the funding or the financing to be able to buy your own property, then this is a really cool way to get your feet wet and to get some experience with real estate investing, and most importantly, to start earning some passive income. So I hope you guys enjoyed this video. If you found the content helpful, go ahead and hit the like button down below. Again, it really helps me as I'm trying to grow this channel and expand my audience. And of course, if you want to join the community, hit that subscribe button down below. And any video ideas, comments, or questions, topics you guys want to see me cover next, go ahead and drop that down in the comments section down below. And I will see you guys in the next video. Have a great day.